yesterday, markets were starting to price in a blue wave, but today they're having to price in some potentially different outcomes. The presidency is still very much in the balance, and it looks like Congress is likely to be divided between the Republicans and the Democrats. In terms of what that means specifically for markets, we think at an index level, broadly, it's not a huge change because there are pros and cons to both sides' policy platforms from a market perspective. But within the markets, we are starting to see some quite big shifts. So if we think about some of the renewable energy names, they were benefiting pretty strongly from hopes of a green agenda under Biden. They're having to reprice. Some of the traditional energy names were fearful of heightened regulation under a Biden presidency and the Democratic Congress. And again, they're starting to see something of a relief rally. If we look internationally, we can see that US stocks today are outperforming stocks in Europe and in the emerging markets, largely because the US stocks would benefit from a lower tax regime if indeed we do see a Trump presidency continuing. Meanwhile, some of the European stocks and the companies in China and the emerging markets had been hoping for more passive trade relations with the US, but now they're having to readjust to an outlook which is perhaps more frosty relations with the US going forward. The market hates uncertainty, and if we have continued uncertainty, then we're going to see prices falling, we're going to see volatility remaining high. From an economic perspective, it's also particularly important this time because of the fiscal stimulus that has been debated between the president and the Congress in recent months. If we don't have a clear new government, then it's much harder for that to get approved. And that obviously has a bearing on the US economy and its ability to recover from the effects of the pandemic in recent months. So it is important that we do see some form of government. I think that's what the market's going to be looking for the most. And the worst outcome is that we don't have any form of government. But we do think that once that comes through, which hopefully comes in the next hours or days, then we start to see that fiscal stimulus package getting approved and the US economy remaining well supported. We've seen the Chinese yuan selling off initially quite steeply, I think, as it was adjusting to the shocks, and then it's later consolidated. So I think currently trading down about 0.7% against the US dollar. That's quite a big move for the Chinese yuan. So clearly, I think that's reflecting that it was hoping for a Biden victory, because that would mean not an end to US-China tensions, but perhaps a bit more predictable relationship. I think obviously we have a continuation of the Trump presidency, then the continuation of those tensions with China, but also the unpredictability and the use of things like tariffs as a tool of policy is more likely. So relative weakness for the Chinese yuan today.